When we talk about compensation strategy, Raj, the first thing you need to understand is a holistic approach. That means we are not just looking at your tax return for this year.
So it is not just about saving tax right now?
Exactly. We look at your entire life, your business income, your family situation, your future goals like buying a house or retiring.
That sounds more like financial planning than tax.
That is because good tax planning is financial planning. For example, saving $5,000 in tax today might cost you much more later if it affects your retirement or benefits. Raj, one of the most important rules in this profession is this: I advise, but you decide.
Why can't you just tell me what is best?
Because every decision has trade-offs. You might prefer lower tax today. Another person might prefer long-term security.
So what do you actually do then?
I show you options. I explain short-term and long-term impact. Then you choose what fits your goals.
I have seen a lot of tax charts online. Can I use those?
You can study them, but never rely on them for real planning.
Why not?
Because charts are generic. They do not include things like CPP, surtaxes, or your personal situation.
So what should I use?
Tax software. It calculates based on real rules and your actual inputs. That is what professionals rely on.
I am not good with numbers. How do I actually plan?
You do not need to be a calculator. The software does the math.
Then what is my job?
You input the right numbers. You run one scenario at a time. You compare results.
Like salary versus dividend?
Exactly. And always compare total tax, not just one side.
How do I really understand tax rules though?
By testing them. Create sample files in software. Change one thing at a time. Watch what happens.
So the software teaches me?
Yes. If something changes and you do not expect it, that is where learning happens.
Can I start planning salary and dividends right away?
Not before you check the minute book.
What is that?
It is the legal record of the company. It shows who owns shares and who can receive dividends.
So ownership matters first?
Always. If the structure does not allow something, you cannot do it legally.
I thought I could just decide who gets how much dividend.
No, that is a common mistake. Dividends follow strict rules.
What kind of rules?
If two people own the same class of shares, they must receive equal proportions.
So how do people split income differently?
By using different share classes. That creates flexibility.
I heard people used to pay family members to save tax.
Yes, that was called income sprinkling. But the rules changed.
What changed?
Now many of those payments are taxed at the highest rate under TOSI rules.
So it is harder now?
Much harder. You cannot just rely on ownership anymore.
What if someone tells me their accountant pays less tax?
Ignore it. Tax planning is personal.
But what if they are doing something better?
You do not know their full situation. Different income, different family, different structure.
So I should not compare.
Never. Focus on what is correct for you. Before anything else, I need to understand your family situation.
Why is that so important?
Because it affects everything: cash needs, tax credits, retirement planning.
So age and family really matter?
Yes, a single 25-year-old and a 60-year-old with kids need completely different strategies.
Do you only look at my business income?
No, I look at your entire household income.
Including my spouse?
Yes, your spouse's income changes tax brackets and planning decisions.
What about investments?
Those two, rental income, capital gains, everything stacks together.
Why do we talk about future income now?
Because today's decisions affect your future taxes.
Can you give an example?
If you defer income now, you might pay more later when your income is higher.
So we need to think long term?
Always. 5, 10, even 20 years ahead.
What is the difference between salary and dividend again?
Salary builds CPP and RRSP room. Dividend does not.
So which one is better?
Depends on your preference. Do you want guaranteed pension or control over your money?
What if I do not save on my own?
Then avoiding CPP can be risky. Your behavior matters as much as the strategy.
Why do people say tax rules changed a lot recently?
Because the government reviewed private corporations.
What was the impact?
Income splitting became restricted. TOSI rules became stricter.
So old strategies do not always work?
Correct. You must apply current rules, not outdated ones.
Can you explain TOSI simply?
It is a rule that taxes certain income at the highest rate,
When does it apply?
often when paying dividends to family members who are not actively involved.
Are there exceptions?
Yes, if they work regularly in the business, if they meet ownership conditions, or if the amount is reasonable.
Which one is safest?
The work-based test is usually the strongest.
This is a lot to take in. What should I remember first?
Start with understanding the client, not just numbers. Always use software for accuracy. Present options and let the client decide. Review share structure before planning. Think about family, spouse, and future income. Stay updated on rules like TOSI.
So becoming good at this takes more than just filing returns.
Exactly. You are not just preparing taxes. You are designing financial strategies.